So banks are preparing for imminent closures. This is why many experts are telling you to get your money out of the banks. But I want to address why many banks are expected to close, what is happening right now, and why you should be extremely concerned depending on where you have your money. So I'm going to break all this down in just a moment, but all I ask is one thing. It takes 2 seconds. Go ahead, hit that like button if you enjoy these daily updates, and now let's begin. So the banking situation at the end of 2024 is dire. Going into 2025, this could go from bad to worse. Just look at this. This is an article from CNBC. It says why hundreds of US banks may be at risk of failure. This was an article back in May. We are anticipating that hundreds of banks are potentially going to close. And these are just average banks. We could see some large banks, regional banks, small banks. Everyone is going to see closures. But why? Well, it has to do with commercial real estate. This is the big issue. A lot of people don't realize how bad the commercial real estate space is, and this is why they keep their money in the bank. This is why they are pretty much naive and blinded by what is coming. The expectation is that we are going to see a massive real estate crash. This is from commercial real estate, not from residential. Now look at this. Okay, this is scary. This article right here, this is from the Wall Street Journal. It says surge in commercial property foreclosures suggests bottom is near. It says lender portfolios of foreclosed and seized office buildings, apartments, and other commercial property grew 13% in the second quarter. Now, what I thought was interesting when I first read this was that they are saying the surge in commercial property foreclosures is suggesting the bottom is near. No, we are getting closer. Okay, we're getting closer to this bubble popping. In 2025, we are expected to see about $1.7 trillion of commercial real estate get refinanced. Here's the issue. Why would somebody refinance a building at much higher rates when that building is now not occupied? Okay, we are seeing in some office spaces, we are seeing 50% of the office building is empty. I have a friend, a friend of mine who works or has a business, and his business is housed in San Francisco. This office building that he rents, it's 11 stories. He is on the very first floor, or the first floor is a reception, second floor, that's where he has his business. Well, he was saying that he was just offered for the exact same price, can he move his business to the top floor? Why would they do that? Well, they're trying to renovate all the bottom floors. They're going to renovate all the bottom floors. Interesting. At this time, yeah, very interesting. But I want to read you a little bit of this article from the Wall Street Journal. It says right here, banks and other lenders are seizing control of distressed commercial properties at the highest rate in nearly a decade. It says a sign that the sector's punishing downturn is entering its next phase and approaching a bottom. Possibly. But while it's approaching a bottom, guess what's also happening? Office vacancy rates are hitting record highs. Look at this. So in this gray, this indicates a recession. So right here, this is 2008, 2009. This is where we were. We saw at the peak, or at the pretty much the bottom, we saw U.S. office vacancy rates right here at about 12%. Okay. We are sitting up here at 20.1%. That is today. So roughly 1 out of every 5 floors in an office building is vacant. Yeah, that's troubling. But again, I bring this to your attention and you're probably wondering, well, why would banks be worried about an office building being vacant? It's because of the maturity dates of some of these loans. We are seeing some of these commercial real estate mortgages, they are going to mature within the next year. About $1.7 trillion are going to mature. Those loans have to be refinanced. But again, when people receive those loans, let's say 10, 20, 30 years ago. Okay, most likely 10 years ago, whatever. But then they refinanced them. Keep in mind that rates were not as high as they are today. Also keep in mind that the office buildings were packed. Businesses like Google and Amazon and Apple and Cisco, whatever, right? They were all inside office buildings. Everybody was working from the office. Now, not so much. Now we're seeing more people working from home. That's turning to an issue. This is one of the reasons why we're seeing so many office buildings pretty much be liquidated and given away. Just look at this. This is in Chicago. It says State Street retail property set for foreclosure auction, appraised 80% lower than a 2013 valuation. I want to read this to you. It says right here, the 170,000 square foot retail space will go to auction on Monday according to CNBC data from Morningstar. An August appraisal valued the property at $19.9 million, a 20% reduction from the previous appraised value of $25 million in 2023, and 80% below its $110 million valuation when the loan was issued in 2013. So the loan was issued in 2013. Again, their businesses are still paying on this. Well, the loan now, the property, is valued at $19.9 million. Let's just say $20 million. So that's an 80% haircut. Yeah, could the person or could the business go and refinance $20 million at today's rates? Yeah, but why would they? Why would they want to keep that? Why? This is the issue, and this is why banks are preparing for imminent closures. Because as these large companies decide they don't want the buildings anymore, they don't want the commercial office space, guess what? The banks have to take them back. Then what? Then what's the bank going to do with it when nobody wants to buy it? That's the issue. But look at this one. It says commercial real estate bargain hunters are snagging offices for extreme discounts up to 70%. This is happening all over the country, not just in New York and San Francisco and Los Angeles and Chicago and Seattle, right? Dallas and Houston. We're seeing this all over the country in some massive cities. In some cities, and I talked about this the other day as well, we're seeing in some cities, they are now converting these commercial offices into housing, into apartments, condos, because those will fetch more money, because those can actually be used, especially right now where we have a housing shortage. Now, would they be affordable housing? Most likely not, but they could still be used. But look at this one as well, okay? This one says commercial real estate foreclosures have spiked 117% over the past year. That is concerning. When commercial real estate is foreclosing, and this is jumping 117% year to date, that's a massive issue. This is why the real estate market is set to crash. Okay? Be prepared for that. But what happens when commercial real estate crashes? Well, the banks are going to pay for it. The banks will fail. But what happens when a bank fails? Well, this is what FDIC insurance is used for. Let's say a bank fails, well, like Silicon Valley. Guess what? The bank fails, but you're insured up to $250,000. So as long as you don't have any more than $250,000 in the bank, 100% of your deposit will be insured. Well, I hate to be, the bearer of bad news here, but that's not how everything works. Look at this. In this article from just a week ago, it says FDIC report reveals alarming $7.7 trillion in uninsured U.S. bank deposits. Currently, there's about $19 trillion in total U.S. deposits. $19 trillion. That's a good amount. $7.7 trillion of which is uninsured. Do you know how much money the FDIC insurance fund is? How much it has? It's a little bit over $100 billion. So that less than 1% of all the money that is deposited in the United States is actually insured. That's a concern. This is why banks are very skeptical about moving forward. This is why they are restricting lending. You go into a bank and you say you want to buy a house, they may just deny you right there on the spot. They say you go in and you want a car. They may tell you, no, sorry, I can't give you a loan for a car because you don't meet our qualifications. What are the qualifications? Well, good job, good credit score, but you need assets because they want to come after you if you can't pay on that car. They want something to go after, not just the car, which as of right now, auto prices are dropping. So again, banks are highly concerned, and this is just commercial real estate. We haven't even touched auto loans, credit card debt. According to reports, 1 out of every 5 people in the United States with credit card debt is not going to pay it. 1 out of every 5, that's 20%. There's also reports that so many people are struggling with their auto loans, which are right now on average about $800 a month, that they are not paying it. They just want to give the cars back to the banks, and the bank's like, well, okay, we can take it. It's going to hurt your credit. But these people are like, well, so what? I'm okay with hurting my credit. What I'm not okay with is not having money to eat, pay for medication that keeps me alive, and keeping a roof over my head. That's what I'm not okay with. So just realize right now, and I want to give you this warning, banks are preparing for imminent closures. They're preparing for a financial crisis. It's just a matter of time. So I will leave you with that. If you have any questions whatsoever, please ask your questions down in the comment section below. But as of today, that is what we know. So again, thank you guys for watching. Consider subscribing, and I'll see you guys on the next one.